Google is about to shock the world, and early investors that take advantage of these trends before anyone else will make millions over the next few years, and I want to help you capitalize on it. But I do have to warn you though, because as interest starts to heat up for cryptocurrencies like Bitcoin and the altcoin market over the next 13 days, we will see the close of the monthly candle on the Bitcoin to the US dollar price chart. And depending on how this candle closes will show us what's about to happen next for the entire altcoin market. So in this video, we're getting into the charts and we're covering the news. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, confirm it by tapping the like button, obliterate the subscribe button, grab your putter and just tap it in, give it a tippity tapperoo. You know who we're doing it for. We're doing it for grandma because we're going to beat the SEC and we're buying our house back with cryptocurrencies. Let's run it. All right, bull runners, welcome back to the channel. So the entire market cap of the industry is $1.68 trillion. Bitcoin's sitting about 42,500 bucks. It's down 8% on the week. You know, Ethereum down 1% on the week, with Ethereum ETF news happening and the rumors spreading about that for, you know, BlackRock and Larry Fink moving from Bitcoin ETFs over to an Ethereum ETF. You know, that did pump up Ethereum in the short term, but the markets are cooling off right now. You know, XRP down 6% over the past week, Cardano 8%, Avalanche 8%. Some projects are up like Chainlink, and you can see Celestia, Sui up over 51% the past week, while the rest of the market has just been slowly bleeding out. You know, Internet Computer down 13% over the past week. So in the micro, in the short term, liquidity likes to flow out of some projects and into other projects, but as the tides rise, so do all ships. Sure, some projects can move faster than others, but just being in the game and being in the markets is a lot more sound, and holding long term is a lot more sound of a strategy than trying to day trade in and out of certain projects. You want to have high conviction plays. And so let's talk about where the conviction is in this industry and some massive partnerships that are taking place behind the scenes in this video. So the SEC, you guys, you know, the SEC sued Ripple. They also sued Coinbase back in June, saying that the firm facilitated trading of at least 13 crypto tokens, including Solana, Cardano, Polygon, and others, which is said should have been registered as securities. Now, Coinbase is the world's largest publicly traded cryptocurrency exchange. And as you guys know, they're the custodian, they're the main company for these ETFs with BlackRock and, you know, other massive institutions. They argued that crypto assets, unlike stocks and bonds, do not meet the definition of an investment contract, you know, a position held by the vast majority of the cryptocurrency industry. And Coinbase, you know, asked the court to dismiss the SEC's lawsuit alleging that the crypto exchange, you know, is breaking their rules. And so the judge this morning heard arguments from both sides, you know, focusing your questions on the legal precedent defining securities and the attributes of several crypto tokens traded on Coinbase and elsewhere that the regulator had deemed investment contracts. So she did not decide the matter from the bench, noting she was still weighing some questions after more than 4-hour hearing. In that 4-hour hearing, you know, Jeremy Hogan posted this on Twitter, saying the motions to dismiss are rarely granted, so he wasn't expecting much. However, just looking at prior orders of motions to dismiss from the same judge on a crypto case, and this might be closer than he originally thought, because back in August of 2023, the Coinbase judge dismissed a lawsuit against Uniswap for sale of scam tokens, admitting the decentralized nature of the exchange played a large role, which we don't have in the Coinbase case because it's a centralized exchange. But there are a couple important things the judge stated in her order that Coinbase has got alike. First, she called Ethereum a crypto commodity. So could that just be lazy writing? Possibly, but the judge was very aware of the difference between a security and a commodity, so he doubts it. So her thinking Ethereum's a commodity is good for, you know, an Ethereum ETF coming. And second, the judge stated that Congress and the courts haven't made a determination whether crypto tokens are securities or commodities. So this plays well with Coinbase's argument that the SEC is overstepping its enforcement authority and that Congress must be involved first. And so based on this judge's prior dismissal of the Uniswap case, her clear understanding of the technology, her finding that Ethereum is a commodity, and acknowledgement that Congress should be involved in this process. Be very interesting to see how this plays out. And so while she might not dismiss it, this is tipping in favor of Coinbase. And as you guys know, with Ripple winning the lawsuit versus the SEC, if Coinbase wins this lawsuit, the SEC is just going to take L after L in 2023 and in 2024. So she did not, decide this yet. She's still got to weigh on some key matters, and we'll be covering those daily on this channel. So make sure you guys subscribe and you like to see some updates on this. Now, when we look at Google Trends, so when we search something like Bitcoin, you guys can see the interest has spiked over the past few years, obviously, but more importantly, within the past month, Bitcoin has surged up to 47 out of 100 from January 7th to January 13th. Now, Google Trends is predicting that to go down to 25 out of 100 towards the second half of this month. And as you can see, back in the beginning of October, Bitcoin was 13 out of 100. So the rumors of the ETF for Bitcoin happening is what spiked Bitcoin up to nearly 50 for this disbelief rally in the psychology of a market cycle that you can see. And if we compare Bitcoin to Ethereum, it's obvious that Bitcoin blows Ethereum out of the water, but that's good because Ethereum is only 10 out of 100 in terms of interest. And as you guys can see back here during the bull run, during May, Ethereum was 100 out of 100. And so we're just getting started in the disbelief phase of this bull run. And when Ethereum starts to rally, the majority of altcoins on Ethereum's ecosystem and other ecosystems will start to rally too, especially when you see massive partnerships in larger companies, whether they're Fortune 50 or Fortune 500 companies, getting into the space that's bringing positive narratives. For example, Flare is onboarding Google Cloud as an infrastructure provider to validate the network and contribute to the Flare Times series Oracle. Enriching decentralized data delivery in a dual role with network validation is what makes Flare the blockchain for data. And as you guys know, Ripple was working with Flare to have the FLR airdrop for that whole ecosystem. And James Tromans, head of Web3 at Google Cloud, stated and said that data access at scale is important to increase relevant blockchain use cases and greater global adoption of the technology. Google Cloud becoming a validator on the Flare network will help support that mission. And so Google is obviously bullish on crypto. And right now, guys, that, for example, over at the World Economic Forum, this meeting that's taking place, a project like Hedera, the co-founder, is joining Solana's president, Casper Labs co-founder, and Ethereum co-founder for an open panel discussion on how blockchains are reshaping the world. So it's no coincidence that they're on this panel because, look at this, Google is set to boost a major build on Hedera use case. They're gearing up to globally promote Nuke Tech and their Carbon Central platform showcasing HBAR's capabilities. The collaboration includes leveraging Google Cloud's extensive network of over 3,000 BD execs. And so Google, guys, is diving into the industry, and Nuke Tech posted saying, we sat down and had a chat with Stockhead AU about our new Google Cloud partnership and what it means for Nuke Tech and carbon neutral. That's the key here, carbon neutral. And so looking at other news on this, on why HBAR is a big deal, yes, I do hold some HBAR, guys. Yes, I do hold XRP. So that doesn't mean you should. Consult your financial advisor on what you should do in this industry. But I'm just bringing you the news. What you choose to do is up to you. No financial advice. This is all educational purposes only. But Hedera Network is approving $408 million of HBAR for their ecosystem growth. And the Hedera Global Governing Council, which is the body overseeing the Hedera network, has approved 4.86 billion HBAR, the network's native cryptocurrency, for further development and advance of decentralized governance. So in this blog post, they announced for this. This is being spread all over the crypto space for the HBAR community. And as you guys know, for HBAR, it's governed by the world's leading organizations like Boeing, Chainlink Labs, Dell Technologies, IBM, Google, FIS, Ubisoft, among many others. And UCL Center for Blockchain Technology came out with this blockchain energy report showing Hedera kilowatt per hours per transaction, and it's showing this compared to the BNB chain, Solana, Near, Tron, Toncoin, Avalanche, and it's 1,000 times more sustainable than even Visa and all these other projects. So HBAR is blowing a lot of them out of the water. So Hedera is committed to being a carbon negative public network through the purchase of quarterly carbon credits to offset the small amount of emissions from all public facing infrastructure. And so as you guys know, like Klaus Schwab, the World Economic Forum freaks that have some weird New World Order agenda to make everything carbon neutral by 2030, where do you think they're going to be putting their energy, and which projects do you think they're going to be supporting for that initiative, for, going electric and what they want to do moving forward. They're going to put it into these projects. Now, whether you want to support that or not is up to you. What I want to share with you is information that can help you become wealthy, that can build you wealth so you can purchase your freedom, because a lot of people look at that as a bad thing and they're like, I can't support that. And my philosophy on it is, you're not going to change anything anyways unless you have hundreds of billions of dollars or you're a trillionaire. You have no power to change anything. The only power that you have is growing your net worth so you can buy land, you can buy real estate, you can buy precious metals, you can accumulate food, you can accumulate resources, you can buy passports in different countries, you can purchase your own airplane if you want, you can buy a private island, you can do what you want with your money. So the key here is become wealthy with your investments and then put that into stuff that you believe in. So if you guys believe that this project will do well, let's look at the tokenomics here, because the current market cap of HBAR is $2.6 billion. The all-time high for this project is all the way upwards of 47 cents. It's sitting just shy of 8 cents right now. The circulating supply is 33 billion. The total supply is 50 billion, half of XRP's. Well, that's the max supply, half of XRP's max supply of 100 billion, and it's sitting at under 8 cents, whereas XRP is hovering between 50 and 60 cents. Now, if we look at all and we click on market cap, guys, the market cap of the all-time high for this project was $6.7 billion. And right now it's at $2.6 billion. And so just to get back to the all-time high is a 6x for HBAR, and HBAR holds 0.0015% of the total market cap of this entire industry. So if this industry goes to, let's just say, $5 trillion and HBAR maintains the same percentage of allocation of the market cap, that would give HBAR a market cap of roughly $7.5 billion. And at the current circulating supply, that would bring the price to right around 22 cents. Now, that's not the greatest thing, but let's just say HBAR accumulates more of the percentage of the total market cap, because that's only at 0.0015%. That's 15% of 1%, which is such a small allocation of the total market cap. Let's say this industry goes to $5 trillion, which is not far off from where we are right now. Remember, guys, that's like less than half of gold, which is just one commodity. And so if HBAR accumulated 1% of 5 trillion, that's about $50 billion market cap. And so if we take 50 billion and divide that by the current circulating supply, that would be about $1.48. Now, looking at HBAR's chart, I don't see why that isn't possible, because drawing the Fibonacci retracement from the all-time high to the low of December, guys, the all-time high was upwards of 58 cents. To do a 1.618, that's 91 cents. To do a 2.618, that's $1.44. To do a 3.618, that's $1.98. And to do a full extension of a 4.236, that's $2.34. So with us sitting at 0.078 right now, a key resistance to look for is about 10 cents. As you can see, it wicked off of it in February 6th, recently wicked off of it again in January 24th. And so if HBAR can break this resistance and hold it as support, the next major resistance to watch for is a 0.382 of about 24 cents. And that's where it ranged back from January of 2022 to April of 2022 before collapsing with FTX, Celsius, Voyager, Terra Luna, all those companies collapsing and us being in the bear market. So everything got destroyed. So this would be the next major resistance to watch for. But if we were to go to any of these levels all the way at the upper echelon of a 1.618 to a 4.236, that's anywhere from a 10x all the way to a 29 or 30x for HBAR. So again, I encourage you guys to do your due diligence on HBAR, but if you do want to see other altcoin projects that we're bullish on first and get early bird access to our financial education platform, take a quick second right now while you're watching this video before we get into Bitcoin and everything else that you need to know, and go to bullrunners.com, click the button on the page. It'll be the link in the description below. Put in your best email address. Do that right now, guys. You'll get access to our newsletter for free and our Telegram for free, and you'll be notified first when we drop videos like this and we post breaking news updates and our top altcoin picks in our Telegram group. So do that right now, because when we look at something like Algorand and a strategic partnership that's taking place right now between HBAR and Algorand, well, Algorand's sitting at a lower market cap than HBAR. The price is at 19 cents. The circulating supply is 80% of the max supply of only 10 billion. So the max supply is just 10% of XRP's max supply, and the price is only at 19 cents right now, guys, for Algorand. The all-time high for this project project was up here all the way of $2.38, and it's currently sitting down from that. You can see the market cap at the all-time high was $12.9 billion. And just to get back to the all-time high of $2.38, Algorand would need a market cap of a little over $19 billion. And that's not that much money, considering how much money is projected to flow into this industry over the next 5 to 10 years, especially when you see the massive companies on the governing council of a project like HBAR and Hedera and the strategic partnership that Algorand is now making with them. Listen to this.
So I'm Lehman. I created Hashgraph and started Hedera, and I'm just really excited to be here with you and with you.
Absolutely.
Tough one to follow that. I'm John. I'm the CTO at the Algorand Foundation.
Excellent. Well, I know you gentlemen have been working on a partnership, and that's exciting to hear. That's one of the big benefits of CFC is the quality of the participants. So why don't you tell us a little bit about it?
Sure, maybe I'll start. So I think for our industry at large, the Web3 space, decentralized asset space, user experience has to be put at the forefront if it's going to be successful. And one of the most frictionful points right now around the user experience for the average person who's venturing into digital assets is the key. The private key is required to spend those assets. It's essentially your right of ownership over those assets. And one of the benefits of Web3 is that having this single key that you own gives a great responsibility of self-sovereignty. It's not with the bank, it's with you. And that's a wonderful virtue of the technologies that we have created and we are working on. However, with that comes a huge responsibility. And folks out there have lost these keys. And with that, they lose their assets. And so, with Swirls Labs, Lehman and his team have come up with a wonderful protocol for how we can ensure that these keys are kept secure in a decentralized manner, and if someone was to lose those keys, they can be recovered without having to trust any one party.
The whole future is things like blockchains and other things that are online, but you have keys, you have passwords. Maybe we'll go to passkeys, but then you have information in your phone that does the passkey. There's always some secret somewhere that you need to protect. And our whole lives are moving online and being controlled with these things. You don't want to give it to someone else, not your keys, not your crypto.
Right.
You want to have it yourself, but then you lose it. And I get emails from someone saying, I've lost my 24-year-old mnemonic. Could you create another one for me? No. but it's bad because every part of our life has a safety net, but not this one. Right. If you lose your password to your bank, someday you'll get into your bank account. If you lose your key for a crypto account, you're out of luck. And so what you have to do is be able to share it with some friends and family, maybe your bankers, maybe your lawyers, but share it with multiple helpers and have your phone every day asking their device, do you still have my part of it? That's really important. And keep it secret. You don't want to know, you don't want the world to know how many helpers you have or who they are. This is important. But the most important thing is it's got to be interoperable. Right. Every wallet, every password manager, this isn't just blockchain, every password manager needs to interoperate. So we've got to have a standard that everyone uses. And it has to be open source and everyone. And that's why I think it is so great that we have this partnership and we're bringing in others also, other blockchains, banks and credit unions and other people. It's just so important to do that.
So let me know your guys' thoughts on that, because when we look at Algorand to the US dollar price chart, Algorand got absolutely destroyed during the bear market, just like everything else. But when it broke out from this descending resistance, that was the first revival for the disbelief stage in this bull run, where we see, price go from 0.09 all the way upwards of 25 cents, a little cool off period as money flows back into Bitcoin. And so money in liquidity moves from one project to another in this cycle. And so ultimately just holding long term is the play here, because eventually the price chart catches up to the utility. It happens over time. And so the next major resistance to look for Algorand is roughly 29.30 cents. As you can see, it got rejected from this downward trending resistance back in the 10th of February of 2023. So this will be the next zone. What I would expect to happen is the next move for Algorand, whether it happens before or after. I think it would happen after Bitcoin's halving. So this video is more so for the tail end of 2024 to watch for, because if we see Bitcoin sell off over the next few months, going into, you know, the Federal Reserve lowering interest rates. If that were to happen, then altcoins may bleed out, but I want to share why altcoins could actually see a massive bull run based on Bitcoin's dominance. So I could see Algorand pushing through this and then back testing, you know, 29, 30 cents as support. And then the next major resistance to watch for is all the way upwards of, you know, 70 cents to 76 cents right here, which acted as support all the way back from May of 2021, July of 2021, and March of 2022. And then it was resistance in May of 2022. So this would be another level, which is about 280, almost 300% away from where we are right now. Now, the all-time high, guys, is a 14x away from where we are right now. To do a full extension, that's a 60x. To just do a 1.618, that's a 22x. So this is definitely a project that I'm holding long-term in my portfolio that I'm most likely not going to touch for the next few years. Now, in the short term, I do have to warn you though, because looking at the liquidation heat map for Bitcoin to Tether on Binance, we can see massive levels and massive dollar amounts of leverage all the way down here at $34,000. It's about $2.53 billion in leverage. And as you guys know, you know, the exchanges like to manipulate the prices to wick into or below, you know, the territories that would liquidate the majority of the leverage traders. And so where would those liquidations take place? Well, that would take place all the way down about $32,400 to, you know, roughly $31,400 right within this area that's dark blue, which is the liquidation zone. Now, what would cause that to happen? You know, could it be a black swan event? Could it be the Federal Reserve? Could it just be how these macro market cycles play out every single time with Bitcoin retracing to the 618? Well, looking back until 2019 in June, when Bitcoin rallied all the way up of $13,900, nearly $14,000, we saw this massive wick and we saw a candle body close, turning this into a gravestone doji candle. Now, this is a Japanese candlestick in which the open and close price of the candle is at the same level or is very close to the same level. And so a doji candle that opens and closes at or near its low, you know, ends up having a long upper shadow and no body. So a long upper wick that you can see right here. Now, if it has a long upper shadow, it's signaling a potential bearish reversal. When it appears the top of an uptrend, it is considered a reversal signal. Now, this pattern is more bearish than a shooting star, which I'm going to cover in a little bit. So as you guys can see right here on the monthly candle for Bitcoin to the US dollar, which does affect the entire altcoin market, we can see this body of the candle is very, very small. You see the wick to the upside is all the way up here, a little bit above a 618 retracement, which was around 13,000, you know, $387-ish, give or take a few bucks here and there. And then on the left-hand side of the screen, we can see Bitcoin's price chart now. Now, this candle has not closed yet because we're still in January. This candle will close at the end of the month, February 1st, because we're on the monthly candles right here. And if it closes somewhere within this range below $43,000, maybe above $40,000, and we form a gravestone doji candle, then by April of 2024, the odds of Bitcoin going down to roughly 38,000, potentially all the way down to $30,000 is a lot higher than Bitcoin pushing to the upside. Now, it doesn't mean that that's going to happen right away, because as you guys can see on the right-hand side of the screen, when Bitcoin topped out for that DeFi summer rally, you know, everyone was telling everybody to get into crypto. You know, your grandma was calling you, you know, your cousins were calling you, your friends that you hadn't talked to since high school were messaging you on Instagram if you were in the markets at this time, be like, hey, what altcoin should I buy? What should I put $1,000 into right up here at the top of the market? Now, very interesting. Where did the ETFs get approved? They got approved right here at the exact top of the market. So a lot of people say, but this time it's different. And guys, you know, if you've been subscribed to this channel for a while, this time is never usually different. This time is usually the same as it's been every single time, because we have an interesting and a funny way of forgetting the past. Now, if Bitcoin closes on the monthly below $43,000 going into February, it doesn't mean we're necessarily going to come down right away, because as you can see on the right-hand side of the screen, when the candle closed at about $10,700, the next month, you know, we wicked all the way upwards of $12,000. The month after that, we wicked all the way upwards of $13,000. But as you can see on the price chart, each month's high was lower than the previous month high, and the momentum shifted from the bulls to the bears. And it took an extended period of time for Bitcoin to, you know, sell off. It was about 47% over the course of 119 days. It was about 52% down over 150 days, and then about 53% down over 175 days. And then we saw a short, relief rallies during those periods. And so it doesn't mean Bitcoin just falls off of the shelf, because, the narrative this time is a little bit different, because now we have institutional money buying in. However, there's been a lot of posts on Twitter of people saying like they broke records. There was hundreds of millions of dollars in volume with these ETFs, but people have to understand this was not buying volume. This was selling volume, because volume might not be good news. Volume might just be people are selling off their Bitcoin. And so that's what we saw happening. And so it wasn't the best news. And so although I am a macro bull, I do have to warn you guys in the short term, because if this candle forms, it's more bearish than a shooting star. Now, what is a shooting star? This could potentially form as well too if we close a little bit higher, but it's a type of candlestick that forms when, cryptocurrency opens on, whether it's the daily, the weekly, the monthly. We're showing the monthly right here, and it advances significantly to the upside, but then closes the next period, whether it's the month or the day or whatever candles you're looking at. In this case, it's the month, near the open again. And so a shooting star is a bearish candlestick with a long upper shadow or wick and little or no shadow and a small real body near the low of the day. And it appears after an ongoing uptrend. And for a candlestick to be considered a shooting star, the formation must appear during a price advance. Also, the distance between the highest price of the day, which is the top of the wick, or the highest price of the month, and the opening price must be more than twice as large as the shooting star's body. There should be little to no shadow below the real body. As you can see right here, the open was roughly 42,000, like 260 some odd dollars. If we close below that open and we close around 41,700-ish dollars, that would be more of a gravestone doji that we saw back here in June of 2019, where you can see the candle body is so small, you can barely even notice it, because the sell pressure was so massive that the bears were stepping in. As you guys can see, the run up to this from the low of December of 2018, there weren't these massive wicks pushing the price down. We just saw green candle, green candle, green candle, and then, a little bit of a struggle right here, red candle, but then green candle, but massive, massive wick. And so the momentum shifted from the bulls to the bears, and then we saw the price momentum change. Now, as you guys can see right here, since September, when the ETF news really started to ramp up and the institutions were getting in earlier than everybody else, we can see green candle, massive green candle, massive green candle, massive green candle. Then the price pushed all the way up here, broke the 618 retracement, massive wick. So what could a shooting star tell you if that's what we form at the end of this month when the candle body closes? Well, it indicates a potential price top for this rally. Guys, we've been rallying for 122 days. So the shooting star candle is most effective when it forms after a series of 3 or more consecutive rising candles with higher highs. And as you can see, 1, 2, 3 consecutive green candles with higher highs. It may also occur during a period of overall rising prices, even if a few red candles were bearish. For example, in 2019, you can see, that there was a struggle period where the red candle came in, but then followed by a massive green candle to the upside. And the long upper shadow and wick represents the buyers who bought during the month but are now in a losing position because the price dropped back to the open. So the people that were FOMOing in at $48,500, which is a 618 retracement, they're now at a loss. And the candle that forms after the shooting star is what confirms the shooting star candle. So it doesn't mean that this is a shooting star yet. It doesn't mean that it's a gravestone doji yet. We still have to wait for February 1st to see what this closes at. And the next candle's high must stay below the high of the shooting star and then proceed to close below the close of the shooting star. And here's an example of how to use the shooting star to analyze your trading strategy. So you can see a rising price of 1 green candle, 2 green candles, 3 green candles, and then a little smaller green candle, but then the shooting star, massive wick, small candle body. The price starts trading sideways. Then we see a price drop confirmation, a rally back up to test this range as resistance, and then the trend reversed to the downside. So what would that look like on the price chart? Well, if we close somewhere within this range right here, I would expect us to form a downward trending resistance and for the price chart to do something like this. And we can even see the price wick up, all the way back up to 46, 47, 48,000, but it would just continuously trend down and we could go as low as $30,000. Although I don't know if we'll go that low. I would expect us to maybe go 37, maybe wick down to $34,000. Like I showed you guys in the liquidation heat map, we could wick all the way down within here, $33,000, wipe off all leverage off the table, and then work our way out of here in the tail end of 2024 after the bears get exhausted and the bulls step back in. And as you guys can see on the open interest indicator, which shows how much leverage is on the table that needs to be wiped off before we can continue the uptrend, we're sitting at 3.73 billion. So we're on the upper echelon at the top right around here. Sure, we could go higher, but as you guys showed you in previous videos, if these ETFs get approved, I was talking about Bitcoin right around 36, 37. I would expect the price to go upwards of $48,500, and we went above it by $500, and then we would come down. And sure enough, it looks like what we're seeing. So I would expect the interest to kind of hover around this upward trending support right here. And then for us to see some type of liquidation event that would bring the open interest back below 3 billion, potentially into the $2 billion range down here going into Bitcoin's halving. Then after Bitcoin's halving, we work our way out of here 6 to 12 months after Bitcoin's halving to start the next rally going into Hope. And so the price chart would look something like this. And then for us to consolidate, after Bitcoin's halving, and then work our way out of here going into 2025. And so it won't look exactly like that. I'm just drawing up on here, but you guys get the picture when we talk about interest, because as you see these liquidation events right here from the 7th of August until September of 2023, we saw leverage get wiped off the table. Sure enough, the price saw a decline after months of bullish price action. You can see we rallied for 84 days, followed by a sell-off. And then we rallied for 140 days, sell-off. Another rally, 238 days of a total rally right here to see a much deeper correction. And so from this period, we've been rallying for 112 days, but arguably on the macro, we've been rallying since the bottom right here for 406 days. We've been bullish, guys. So I would expect us to have at least 2 months, at least 3 months, maybe 6 months of bearish price action to the downside. It might not go as deep as everyone thinks to, $30,000, $31,000. We might just wick down to, 32, 33, and then have a quick recovery as institutions buy it up. But nonetheless, every single bull run prior to this, Bitcoin has seen a sell-off going into the halving. So to say this time is different is ignoring history. That's like saying, but this time in the United States is different. It's not like Rome, although we're repeating the same mistakes. Now, in the macro, when in doubt, zoom out, Bitcoin's going to continuously trend up. But going back to June of 2016, we can see what happened here for Bitcoin. Bitcoin rallied all the way up from $400 upwards of $700 in anticipation of the halving. Rumors of the halving coming, people were buying into Bitcoin. And the altcoin market, it saw some momentum, but not that much money. It was only at a $200 million market cap. And when Bitcoin saw a crash down, I covered this in a previous video where Bitcoin dropped about 31% over the course of 5 days. Well, the altcoin market got hit as well too, over even more than Bitcoin did, but Bitcoin continuously trended downwards, and Bitcoin saw an even deeper correction down to $466, which was a total sell-off over 49, 50 days of 40%, whereas the altcoin market rallied out of that low, and if you bought that low, it rallied over 330% the entire time. So then when Bitcoin cooled off, the altcoin market cooled off, but where did it make more sense to have your money in during that period if you were going to stay in the game, if you were going to stay in the market? It made more sense to be in the altcoin market. Sure, the initial hit hurts a lot more, seeing a sell-off of nearly 40% instead of 30% in your entire altcoin portfolio, but eventually the altcoins catch up. Now, looking at Bitcoin's dominance around that time, when Bitcoin saw that first initial sell-off and over 5 days, Bitcoin's dominance dropped from 98.5% to 98%, big whoop, right? Still held 98% of the total market, but then it dropped all the way down to 94% on that massive red candle to the downside when the altcoins saw the massive green candle as money flowed out of Bitcoin into the altcoin market. And then after that, what did we see right here in the 27th of February, 2017, guys? This was historic. Bitcoin's dominance dropped from 96%, and it fell off of a shelf. Went down to 60%, rallied back up to 79, dropped down to 50%, rallied back up to 70, then dropped all the way down to 35%. That was during this entire period right here on the bottom of the screen where altcoins went absolutely parabolic, and the altcoin market cap went upwards of $480 billion. And then the last bull run, I mean, it went upwards of $1.68 trillion. So to say this time it's different and Bitcoin's going to outperform altcoins makes absolutely no sense. The altcoin market is just barely trending upwards, guys. We're just seeing this disbelief stage right here. And if you watch my previous video, I broke this down perfectly for you guys right here that you can see on the screen right now. If you're driving in the car, make sure you check this out when you're pulled off to the side of the road. It shows you guys how the psychology of the market cycle looks on these charts right here and how we're just in that disbelief getting into the hope stage right here. We're not yet in hope until we really breach this dead cat bounce resistance of roughly $1.28 trillion. So the fact that we're sitting just shy of $800 billion and we were rejected from this zone of support right here, even if we see a sell-off to the downside in the short term, if Bitcoin bleeds out and sees a drop down to 30K, 32, 33, 35K, whatever that is, and altcoins see a sell-off, eventually, guys, I would expect this resistance to break, hold as support, and for altcoins to go absolutely parabolic the tail end of 2024 and even into 2025. And as we can see on Bitcoin's dominance right here, it's starting to roll over to the downside. Now, when money comes out of Bitcoin, it either flows into altcoins or it flows into stable coins. And so wherever that money flows, that's where attention goes. And together, we're going to be backing up our truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I'll see you guys on the next video. I'll see you on bullrunners.com, where you'll discover our top altcoin picks first before we make these videos about them, and you'll get early bird access to our financial education platform when that's released. You don't need any crypto trading experience. All you need to do is go to bullrunners.com, the link in the description below, click the button that says, yes, give me instant access, put in your best email address. It's free. You get instant access to our Telegram group, and you get the best information to help you prepare for the worst that's yet to come in this economy, because you know where we're going. We're going camping on the beaches of the moon. I'll see you guys on the next video. I'll see you on bullrunners.com. As always, stay bullish.